It is another Thank God Friday to the start of the weekend. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's the 6th of February. We thank you for joining us at this time on today's edition of Money Moves.
All right, then let's tee off with your news now for this Friday. At the World Government Summit, Akinwumi Adesina launched the Global Africa Investment Summit to mobilize capital into Africa following cuts in foreign aid. The summit, co-founded and chaired by Adesina, aims to unlock value from Africa's sovereign assets by converting them into de-risked investment-ready portfolios that meet institutional standards for risk, return, and governance. Adesina said Africa is structurally positioned to drive global growth, stressing that Africa is not aid. Africa is alpha. In the meantime, Africa's leading law and business advisory firm, CLG, has announced the appointment of Onyeka Cindy Ojogbo as its managing partner. The Pan-African law and business advisory firm, active in 50 countries, Onyeka Ojogbo, its youngest ever partner, brings distinguished expertise in energy and finance. Her elevation reflects exceptional leadership, deep sector knowledge, and proven ability to drive cross-border legal and business advisory services, according to the firm. In Ghana, President John Mahama has reflected on the key outcomes of his official visit to Zambia, highlighting areas of strengthening cooperation and shared priorities between both countries. The visit focused on deepening bilateral ties, regional integration, and collaboration across strategic sectors. Let's listen.
Yeah, and Accra Reset is about what chart Africa should pursue in the changing geopolitical world, because the rules-based system, multilateral system, has become shaky. Countries are acting unilaterally. They are cutting down their overseas development assistance. Humanitarian assistance has gone down. Africa cannot continue going cap in hand, begging for that kind of assistance. We need to pull ourselves up by our bootstraps. And so I chose to give a speech that rallies Africa together based on the objectives of the Accra Reset, so that we can, one, come together, collective decision making, and then apart from that, carry out internal reforms in terms of our governance and everything, respect for human rights, and all the fight against corruption, accountability, selfless leadership, service, consider leadership as service to the people. All those things are necessary for us to be able to face the rest of the world. And I said the Accra Reset is not about disrupting global partnerships. It's about forging new ones based on mutual respect and shared prosperity. And so that formed the theme of the speech, and I think that is a carryover from the early days of Pan-Africanism. And when President Nkrumah said we need to show to the world that after all, the black man is capable of managing his own affairs, and so we must learn to manage our own affairs.
In other news, Nigerian fintech RedTech is considering raising about $100 million over the next 2 years to support its Pan-African expansion. The Tony Elumelu-backed company plans to expand into 29 African countries in the first half of the year, according to CEO Emmanuel Ojo. Following the expansion, RedTech is expected to pursue a Series A funding round as it scales its payment and agency banking operations across the continent. Meanwhile, the president of Tanzania, Samia Suluhu Hassan, and the immediate past president of the African Development Bank Group, Dr. Akinwumi Adesina, have spoken on the need for the developing economies to change their focus on Africa from aid to private capital investment. The two leaders are in Dubai for the ongoing World Government Summit, where they provided further insight into Africa's ongoing reforms, long-term investment, and more. Let's listen.
But we have to look at Africa not from an age perspective, from an investment perspective. And let me tell you why I believe so much in Africa. First is that if you take a look at the real GDP growth rates that have been projected by IMF, this year Africa will grow at roughly 4%. And at 4%, it has the highest growth rate in the world, of all regions of the world. But not only that, something else to pay attention to is that for the first time ever, Africa will maintain that real GDP growth rate as the best in the world for the next 4 consecutive years. So that is not a blip. That is not some kind of cyclical noise. That is something that tells you that this is structural momentum that we are talking about, that is powering the growth. And you can understand why. Macroeconomic stabilization is working better on the continent. Fiscal consolidation is working. A lot more investment in terms of attracting investment, investing in infrastructure, which is leading to productivity growth, and all of that is going on. So that is something to pay attention to. Secondly, is that if you look at global capital, John, you see that quite a lot of that from MTN, you have BlackRock, and you have Vanguard that are investing in it. You have Dangote, for example, which is the largest industrial conglomerate that we have in Africa in terms of cement. You have Safaricom, which is the world's largest, mobile company in terms of mobile money. And you look also at Jumia, which is now listed on the New York Stock Exchange inside of fintech. So that tells you that Africa here is not just about promise, okay? Africa is about portfolio. These portfolios are working. Now, look at what is happening for those that are investing in Africa. In the last 5 years, the performance of infrastructure assets and also other real assets is probably giving about low teens to mid-teens in terms of returns. Now, that is important to the extent that it's also not correlated with public assets globally.
We thought we have to create a conducive business environment in the country. So we had to change our policies, laws and regulations to make them more attractive to the investors to come in the country. But number 2, we had to have policy consistency, reliable policy, consistency in our policies. That's what we have done. But again, building the necessary investment infrastructure, like the physical infrastructure. We've been working hard in constructing the standard gauge railway. It's about 2,100 kilometers connecting to Burundi, and then it will connect to DRC. And we think that's a major route which can be used from Dar es Salaam port to wherever in the region.
In other news, the International Islamic Trade Finance Corporation, ITFC, part of the Islamic Development Bank Group, signed a $35 million sovereign facility with Djibouti to strengthen the country's port-based bunkering services and regional trade position. The agreement signed in Jeddah by ITFC CEO Adib Yusuf Al-Amma and Djibouti Minister of Economy Ilyas Musa Dawale will support procurement of refined petroleum products through Red Sea bunkering, enhancing port operations, revenue diversification, and Djibouti's role as a strategic logistics hub in the Horn of Africa. Finally, on News Now, the Central African Stock Exchange has launched the BVMAC Enterprise Support Program, BVMAC ESPRO, to help companies access capital markets and overcome regional financial market constraints. Announced on February 3, 2026 by BVMAC CEO Louis Banga Tolo, the initiative functions as an incubator supporting both large and small companies, backed by the Central African Financial Market Supervisory Commission and a network of mentors and experts. BVMAC ESPRO is built around 3 pillars: market education to boost financial literacy, alignment with international government standards to reassure investors, and issuance preparation to enable IPOs or bond offerings in the CIMAC zone's narrow public debt-dominated market. I am Melissa Enoch, and that's it on News Now this Friday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market updates.
South Africa's accession to the Africa Export-Import Bank affirms our commitment to African industrial development and to deepening trade, investment, and development across our continent. Once finalized, the South African Exim Bank country program will be operationalized with a finance package, as we had, that will initially support a range of strategic projects across the trade and industrial cluster. And you are correct in saying, Minister Tau, that when the issue came up, I asked, this is so logical. And I even asked, what took us so long? Because this is the family that we should have been part of from the get-go moment. The program will inject capital into priority industrial projects, export diversification, infrastructure development, and more importantly for us, transformative initiatives.
Welcome back to Money Moves. Let's now go over to Grace for updates on how the markets wrapped up on the last day of the week. Hello there again, Grace.
Thank you, Melissa. We are back to the final trading day of the week, starting off with the equities as usual. The Nigerian Stock Exchange added 1.01% to 171,316.05, while the BROVM in Abidjan gained 0.70% to 372.20. The Nairobi Securities Exchange was little changed at 202.31. In South Africa, the Johannesburg Stock Exchange rose 1.10%, and in North Africa, Morocco's MESI slipped 0.20%. Let's do a quick round on some of the Pan-African currencies. The Rand strengthened 1.16% to 16.12 against the US dollar. The Egyptian pound eased 0.03%, while the CFA franc inched up 0.01% to 556.38. The Kenyan shilling gained 0.04% to 129. The Moroccan dirham rose 0.07% to 9.18, while the naira added 0.22% to 1,366 naira 32 kobo as at 13:53 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude slipped 0.06% to $67.51, while US WTI eased 0.14% to $63.20. Natural gas gained 1.91% to $3.57, and Arabia gasoline rose 0.38% to $1.93 as at 13:41 GMT. Now, finally, two metals prices. Gold climbed 1.16% to $4,946.10. Copper was nearly flat at $5.81, and platinum fell 1.84%. Aluminium dropped 1.24%, while iron ore declined 1.12% to $101.03 as at 13:48 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets wrapped up on this last day of the week. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and do have a splendid weekend.